Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Tuesday, January 4th, 2011. The second trading day of 2011, and all of a sudden, news is breaking out everywhere about the possibility of default. Chicago is going to run out of money in just 2 to 3 days. Who's going to bail them out? Certainly not Congress. Will the Fed? What will happen if Chicago doesn't get bailed out? Munis are already selling off big time. If they do get bailed out, you might see a little pop in muni bonds. But if you don't, you're going to see a landslide. That'll also be good for gold and silver. Over in Eastern Europe, Poland, Hungary, and Bulgaria are nationalizing their 401ks. So I guess they're desperate for money too. And oh, by the way, do you know who owns all those Eastern European country bonds like Croatia, Estonia, Hungary, even Russia? That's right, you got it. Spain, France, Germany, England, and Italy, just to name a few. Things are starting to get a little bit strange, and it's only day 2. Our markets didn't follow through like they did yesterday. The Dow was up 20 points, the S&P was down 1, and the NASDAQ was down 10, or 1/3%. The big news though, gold, silver, and oil had a decent sell-off. Gold was down $42 an ounce to $13.80. Silver was down $1.31 to $29.80, over 4%. And oil was down $2.23, or a little less than 2.5%. Oil is now under $90 a barrel at $89.32. The good news is that gold and silver both came off of their lows at around 1 o'clock today and had a little mini rally going into the close. I'll tell you a couple things that could make gold and silver spike right back up. Chicago and Europe, those two things that I just mentioned. Just one or both of those in crisis, and you're going to see heavy buying. And by the way, the reason for the sell-off in commodities and gold and silver and oil is because the dollar got stronger. The dollar was stronger against the euro and the yen, and modestly weaker against the pound. And because of that, Treasury yields on 10 and 30-year or longer bonds was up and prices were down. Investors are moving to shorter maturities. The commodities were also down virtually across the board with the exception of cotton, which was up 2%, and lumber. But most of the other commodities were down between 1 and 4%. But folks, remember, nothing goes straight up or straight down. The longer-term trend for gold, silver, and commodities is still defiantly upward, especially with Bernanke in the driver's seat, printing even more money. Europe was marginally higher with the exception of Germany, Netherlands, and Norway, but Germany, surprisingly enough, after all the positive economic and manufacturing data coming out of Europe, Germany had a spike in their unemployment. That surprised everybody, including me. Asia was up, and both China and Japan were up about 1.5%. A few exceptions in Asia, India and Malaysia, and Australia, but Australia is explainable because they have flooding of biblical proportions. There's flooding in Queensland like they've never seen before. Rio Tinto and BP Billiton both had to suspend mining operations and even suspend some payments. It's very serious in Australia. The things to watch for over the next few days: See how Chicago is going to get out of this one. Obama does not have the Democratic Congress that could easily pass a bailout for his former city. With this Republican Congress, it's not going to happen. It might be just up to the Fed. Now, wouldn't that be something? This has been Dan Stewart for your NORAM Asset Management Market Update. Tuesday, January 4th, 2010.